Good afternoon, everyone, and welcome to this informative webinar on corporate taxation, covering taxation of free zone and automation in tax. My name is Ankita Mukhija, and I'm a chartered accountant and a certified fraud examiner. It is my privilege to serve as your moderator for today's discussions, guiding us through the intricacies of corporate taxation. As corporate tax becomes a pivotal aspect of financial structure, business must prepare for the associated compliances. Today, we will delve into the preparedness required for corporate tax and explore the potential for financial system automation. Joining us are three distinguished speakers with decades of experience in audit and taxation services at Big Four consulting firms and large multinational organizations. I'm delighted to introduce our speakers, Manish Saraf. Manish is a chartered accountant with over 20 years of experience in audit and tax. He has worked previously with Deloitte, PwC, and other multinational business houses. Over the last 7 years, he has been in UAE serving the clients in VAT compliances, health checkup, and corporate tax assessment. He has conducted several seminars on corporate tax topics. We also have Pradeep Gujran with us. Pradeep is also a chartered accountant, having more than 18 years of experience in risk management and internal audit. His proficiency extends to implementing RPA solutions, leveraging Power BI for dynamic data visualization, and utilizing Python and SQL for advanced analytics. With expertise in generative AI, Pradeep is at the forefront of innovative solutions, optimizing business processes and enhancing decision making capabilities. Alongside Manish and Pradeep, we have Shraddha. Shraddha is a transfer pricing professional with 9+ years of experience at Big Four in global Indian and UAE tax. Prior to joining SNB, Shraddha was working with Deloitte and PwC. She has done her master's in Eco from Presidency University and Management Development Finance certified from IIMK. She has worked on various transfer pricing assignments, including compliance assessment, APA, and global documentation. I encourage each one of you to actively participate, ask questions, and take full advantage of the expertise and knowledge that our speakers bring to the table. Without delay, I would like to pass on the floor over to our experts. Manish, over to you.
Good afternoon. Thank you, Ankita, for the warm welcome and introduction about the today's session. So, good afternoon again to everyone for taking out time to understand the nitty-gritty issues around the corporate tax and how does it apply specifically for the free zone. That is our key area of focus in today's discussion, talking about different qualifying activities and how your business get applicable or how you should be ready yourself to get the benefit of the free zone, qualifying free zone. So today what we're going to talk about from the different aspects of the federal decree law, which is a corporate tax law, and the different ministerial decision which has been announced. So what we present today is not our independent view or opinion. It is you should not consider as a federal decree, but our all the concepts has been taken up from the ministerial decision. For any decision making which you do consult your consultants to get a better advice on how that apply to your scenarios. So today, what we're going to cover is a basic, just a recap. If you would have attended previous sessions on the corporate tax, just to recap on 5 minutes about the applicability of the corporate tax, and then get into the detail of main aspect of the qualifying free zone, what are those benefits available, how that is applied to your business, and then different documentation which our transfer pricing expert will talk about on the connected party, related parties, and the documentation to be maintained for that. And then, of course, Pradeep will take us through the automation, how an automation plays a key role in the tax reporting or gathering the information for the tax reporting purposes. So as we progress through this discussion, what we will do is that we will take a question answer session at the end of this session. So there is a chat box. You can keep dropping your questions, whatever comes in whenever the topics are taken up, and then we will compile all those questions which have been raised and try to address those at the end of the session. So, as we all know that it has been corporate tax has been implemented last year from 1st June 2023. But yes, it depends upon the financial period of the company, and most of those companies in UAE has their financial period from Jan to December. So the 1st Jan 2024 become the first year of corporate tax, and as in corporate tax, there is only one return to be filed annually, which is 9 months after the end of the financial period. So the first, if your financial period is Jan to December, so 30th December being the end of the financial period, so the first return to be filed will be 30th September 2025. Whereas in VAT, we have seen it's the quarterly return being filed, but in the corporate tax, it is the one annual return to be filed. So just to recap on, on the understanding on the tax rate which we have is it is categorized into two: the general rate and the qualifying free zone rate is different. So for general companies which are mostly in the mainland, the tax rate applicable to them is there's a slab of that. There's 375,000 up to 375,000 of net profit. Your tax is 0%, and over and above 375,000 of net profit, there's a 9% tax. So if your company has a net profit of 500,000, so so the tax would be applicable on 125,000, which is over and above 375,000. So 9% is on the 125,000 net profit. Whereas for the qualifying free zone persons, if they meet the requirement of qualifying income, there are certain conditions which to be met, and if they meet those conditions and they are doing those qualifying activities, then they get a benefit of 0% on the qualifying income. And if they're beside the qualifying income activities, if they also have some non-qualifying income, then they pay 9% on that portion of non-qualifying activities, but they don't get a benefit of this slab of 375,000. So there is no slab to qualifying free zone person if they are doing certain non-qualifying activities. Then they will straight away pay 9% on the whole net profit what they earn on this. So we'll talk about in detail what are those qualifying income and non-qualifying income for a free zone person to benefit as a qualifying free zone person taxability. So looking at the taxable person, we see the overall how it is categorized is resident person or non-resident person. And resident person can be incorporated in UAE, and as we know that there are free zones, there are around 50 plus free zones in UAE. So it could be either in the mainland, Dubai, Sharjah, Fujairah, anywhere in the mainland, or it could be having an operations in the free zone, Jebel Ali free zone, or a Medan free zone, or DMCC. So those who are resident and they have been incorporated, has a proper license of LLCs, companies being formed, or a free zone person license being formed in the UAE, then they are resident in UAE. And the companies, there's also possibility that company which has been incorporated outside UAE but controlled and managed in UAE. This is a concept which everyone need to know about it. Like if you have a company in suppose in Sarza, and you also have some operations of like doing a trading activity in electronic, you also have some kind of operations outside UAE. That means you have some setup in Oman, a company being created in Oman, and that is being managed, controlled from UAE. So the key decision maker or the owner is resident in UAE and has also an operation in Oman. So the income earned in Oman also get taxed in UAE, but then we have this tax credit benefit based on the double taxation avoidance agreement and the tax credit. Whatever tax is being paid in outside UAE can be credited and then adjusted against the tax liability. So that need to be assessed to see whether what kind of operations you have outside UAE and how those control and management is being taken for the decision making for the control and operations is done for those entities outside UAE. So we need to study that structure when you are working out your corporate tax applicability in UAE. And with respect to the natural person, so natural person are also taxable, as you must be aware that But there are certain activities for which natural persons are not taxable. So if they're earning salary and bonus or wages, that is not taxable. Or also in respect to the real estate rental business, if a natural person has some real rental properties and earning rent on that, that is not taxable. And then also from investment in share stock market, for which don't require a license specifically, so that is also not taxable. But other than that, any activity which is a business activity, suppose a natural person does a consulting activity, so that consulting activity get taxable, as a natural person. So he need to also register for the corporate tax purpose, and then do compute the tax liability for his business income. And for non-resident, so non-resident are categorized here as a three. So having a permanent establishment in UAE, that is having a branch office in UAE. So someone who has a non-resident, so could be an Indian company who is supplying their electronic items from India to being distributed in UAE, and they have a branch set up. So they don't have basically a LLC company, but it's a branch. So that branch becomes a permanent establishment, and then the income earned on that get taxable in UAE for those non-resident. And then there's a concept of derives UAE source income. So when we say UAE source income, that it means that it doesn't have a branch, but then what it has is basically uh, it has an agent relationship through which it's selling those goods in UAE. Suppose there is an agent on behalf of a non-resident based out of India is supplying to an agent in Dabza for those electronic items, and that agent is selling and distributing on his behalf. So then that whatever earning he is getting through that agent, that gets taxed for the non-resident, because there is a source of income generated from UAE. So that earning is done from UAE, so that get taxed in for that non-resident. And there is a third concept of having nexus in the UAE. So this nexus means basically any kind of relationship any non-resident has in UAE. So recently there was a ministerial decision wherein a non-resident having an immovable property through which is earning, then that income for that non-resident through that immovable property get taxed in the UAE. So now, in last month in the March, they have recently declared the deadline by which when you should register yourself, and it all depend upon for the month in which the trade license was issued. So a resident judicial person whose trade license has been issued in the month of January or February, then the deadline for registration is 31st May 2024. So this month, coming month, the May month, by this May month, they should register themselves. So when I say month of issue, that means it could have been issued in January 2024. Sorry, the trade license could have been issued in January 2021 or Feb 2021. Any year it could be, but but based on the month in which it has been issued, that is from their month, from based on that, your deadline of registration is there. So similarly for March, April, May, June, July, so these are the month in which the license have been issued, and on the right side we see the timeline by which your company need to be registered for the corporate tax. And if you don't get yourself registered within this timeline, then there is a penalty of 10,000 for delayed registration. So make sure that you get registered. Now once we have seen we have been applying for registration, then we see there are certain queries being raised up, and because you need to apply online through the FTA portal, where your trade license might not be updated correctly, or the renewed trade license is not updated, or it's just about to expire, then also they raise a question: first renew your trade license, and then you can apply for corporate tax registration. So make sure that you are doing well in advance, at least in a month before, because it takes time for the authorities also to respond, and it may take time depending upon the documentation requirement for your business. So plan it well in advance to get yourself registered for the corporate tax purpose. So now getting into the main topic which we have today is about the qualifying free zone persons. So if you see, that when we say qualifying free zone, what are those conditions required to be qualified? First is the having a qualifying income. So we will talk about the qualifying income in the next slide, which talks about qualifying activities, excluded activities, and when those transactions are turned between the within the free zone person and outside the free zone person. We'll look into that. And the main concept is about the educate substance. Now, the whole purpose of having this concept of educate substance is that authority want to check that you have real business in this phase zone. It is not just to take a benefit of tax, that you don't have operations being carried out and you are just showing in the book record, but there is nothing physically, or the operation is not physically being carried from there. So that is the how the concept of educate substance has come in. And there is also economic substance regulation, which also talks about educate substance. So for corporate tax purpose, the educate substance is when you are undertaking your core income generating activities in the free zone. That means if I have been talking about electronic trading business, if someone has an electronic trading business in Davza, okay, so where he's sourcing it from China or other country and then distributing it in UAE, then for that purpose, the educate substance is basically that core income generating is the distribution of that or resale of those electronic items from Davsa. So that means he has an office setup. He has a proper, based on the revenue he's generating it, there are people who's working on that. There are sales people or the operations people there, or the support team is there. The whole team is sitting there in the Davza carrying out this particular activities, and there has to be educate asset, employees, operating expenditure. And this is very subjective, it cannot be fixed for that this particular business will have such kind of. It all depend upon your business and the nature of operations you have, and you need to justify that that adequate number of people are there who are qualified to manage that particular business, or the kind of asset you have, which is supportive to carry out your business. So that is very important, and it will depend upon the kind of business you are into, the volume of business you're generating. Maybe for a consulting company, which is a small setup, might not require so many people, or even the office space might not be large enough. So it all depend upon the business to business that need to be assessed. What is the adequate substance? And then another criteria is having the audited financials. Now, why this requirement has come up that it is mandatory for a qualifying free zone to get their accounts audited, because you are getting this benefit based on certain qualifying activities you are carrying out. So to substantiate that you are carrying out that qualifying activities and you are maintaining adequate substance in terms of expenditure and income, those are getting recorded, and that was actually being there physically and carried out. And so that need to be verified. And that's the reason there is an audit requirement for those financial statements. Then another concept of maintaining an arm's length principle. It also is critical to follow the principles of arm's length and the transfer pricing, which we have a separate section today to talk about in detail. Just to give a brief that this is a requirement which comes in because the qualifying free zone person get a benefit of 0%. Now, what would happen when you have this transaction between your related party or group company, where you have operations in free zone and as well as in the mainland, and you are doing any kind of transactions? So what would happen that to shift the profit from your mainland to free zone, you might charge more revenue and cost in the books of your free zone person. So where you are because your profit is at 0% taxable in free zone when you meet the qualifying criteria, so you might not be recording it at arm's length. So that's the reason arm's length become critical when it is a rated party or group company transactions for the qualifying free zone persons. And also on the fourth criteria is that even if you fall, if you are eligible to be qualifying free zone person, then you don't go and elect yourself voluntarily saying that, okay, I don't want to take benefit of 0% corporate tax, I'll pay 9%. So I mean, you would not go and opt out, okay, saying that I'll pay 9%. When you are meeting those criteria of your free zone, then you will want to maintain that status of qualifying free zone and pay 0% on the earning which you are doing. Now, there are other conditions which are there. Now, if you don't meet up all this criteria, in any year, suppose you have met this criteria in 2024, all this adequate substance, doing a qualifying activity, qualifying income, and you are getting a financial statement audited and having a transfer pricing regulation followed. And suppose in 2025, if you don't meet up any of this criteria, then what would happen that from 2025 itself, you don't get benefit of 0%, and the next 4 years as well, you won't get benefit. So until 2029 December, you won't get this benefit of 0% because you have failed to maintain meet the requirement in the year 2025. So you make sure that you are consistently maintaining the status with all the conditions, and so that you are able to get this benefit in the future year as well. And then even you can outsource your activity. So when I say outsource your activity to related party or any third party in the free zone, suppose you are having a, you have a job work basis, so you are importing in the bulk all the electronic items, and then for packaging and repackaging, you are outsourced to third party. That third party should be also in the free zone, so you can get to some of the activities outsourced to third party. Then but make sure that there's adequate supervision. So if you are importing in DAVSA and getting, and you have a third party who does the job work basis of packaging, repackaging, processing, that processing activity is also part of qualifying activity. So whatever you are outsourcing, that has to be a qualifying activity, and it can be done by third party as well the third party, then you get a still benefit of it. But make sure that there's adequate supervision on the work being carried by the third party. So now looking at this aspect of qualifying phase zone, so there is a, as I had mentioned earlier, that there is a 0% tax on the qualifying income, and there is 9% tax on the non-qualifying income. Now, what is that qualifying income which I was referring to? So those qualifying income is income from another free zone, and the beneficial is the ultimate beneficial recipient of this. So when I say income from another phase zone, that means so a DAVSA phase zone sells goods to the maybe DMCC phase zone person, or any other phase zone person. So he's selling that goods to another phase zone person. Then income earned from that is a qualifying activity. Now it says that it should not be part of excluded activity. That means he can do any activity within the free zone or any other free zone. So DAVSA free zone can do with your Jebel Ali free zone person or your DMCC free zone person, any free zone, and it should not be part of excluded activity. So suppose if I will refer to the next slide where I'm talking about different free qualifying activities. So like suppose consulting services is not listed down in the qualifying activities, and it is not part of excluded activity as well. So even then, the consulting services is not part of your qualifying activity or excluded activity, but you can still benefit of having 0% corporate tax if that is being done within the free zone person. So if DMCC person is doing a consulting services for your DAVSA free zone person or any person in the free zone, then you can still benefit, provided it is not an excluded activity. So we look out what are those excluded activities. Then another is income from qualifying activities from mainland, out or even outside of UAE, except excluded activities. So it is mentioning about only qualifying activities. So a free zone person who does a business with any person, whether be in the mainland or could be outside UAE with Oman, Kuwait, any country. Okay, but it should be only qualifying activities. So if they are doing only qualifying activities from with the mainland companies or companies outside UAE, they can benefit of having a 0%, but only qualifying activities. So we will go through that qualifying activity list. And then another is the income from qualifying intellectual property. So the intellectual property could be your software, which is copyright, or a patent, or a know-how. So any income generated from the intellectual property by a free zone person is also a you get a benefit of 0% on that. But there is a subject to de minimis rule. Now, any other income, it could be either of these three, where I talk about, uh, business within the free zone person or business outside the free zone person for the qualifying activity or intellectual property. But beside these three, if there's any other income, but then that the other income should not exceed that de minimis. That means it should not exceed the total revenue by 5% or 5 million, whichever is lower. So your any other income outside this should not exceed the total revenue by 5% or 5 million. So we will also look at what is included in the total revenue to calculate your 5%, which is other income. Now, looking on the other side of it, we talk about non-qualifying income, a 9% corporate tax rate on the non-qualifying income. So, which is basically 9% would apply on the revenue from immovable property in the free zone only if those are commercial property and the transaction is with the non-free zone person. That means a company has a real estate business, and that real estate is for the rental of commercial business houses. So, so the rental income earned from a non-free zone person. So that means if a DMCC free zone person has a commercial property in the DMCC area, and he's earning any rental income from a mainland company who's using that space, rental space. So any income earned by from a non-free zone person in that free zone area, then it is not. That means if he is doing that business with any free zone person, that means if a DMCC, I mean business LLC company has a commercial income from the rental income from any other free zone person. That means it could be Davza is that income is earned from a Davza free zone person using that rental space. Then it is allowed. It is basically qualifying. But when it is from the non-free zone person, then it is taxable at 9%. And similarly, any transaction with any person, that means it could be with the free zone person or outside the free zone person for non-commercial property, then it is taxable at 9%. So it could be your residence, or hotels or service apartments, which are non-commercial. It is not for the business purpose. So this residence or hotels or any kind of stay arrangement is being provided, then they are defined as a non-commercial property and it get taxable at 9%. And any revenue earned from a domestic permanent establishment. Now, what is this domestic permanent establishment? As we understand, the permanent establishment branch is a permanent establishment. So similarly, for a free zone person, say a DMCC free zone person has a branch in the Dubai mainland. So any revenue earned from that branch mainland company, which is a domestic permanent establishment for this free zone person of DMCC, that get taxed at 9%, because branch income is generally clubbed together with the main license company. So, but he has to maintain separate books of account, separate record, because that the rate of tax for those branch in mainland is 9% for a free zone trade license company. And similarly, it could be foreign permanent establishment. That means he has a branch in Oman, in Kuwait. So any income earned from that branches also get taxed at 9% in the as a non-qualifying income for that particular free zone person. So now when I was looking at this de minimis requirement, so now what is that de minimis requirement is 5% of total revenue or 85 million. So what is the definition or what is not included in this total revenue when we calculate? So below are not included in the total revenue. Revenue from immovable property in a free zone, from commercial property transaction with non-free zone person, transaction with any person for non-commercial property. So what we looked here, these two, which are basically 9% taxable, this is not included. These two, commercial property transaction with non-free zone person and transaction with any person for non-commercial property, residence, hotels, the income earned from this revenue, this will be not considered in the total revenue. So if you have, suppose, you have a revenue of 10 million, out of which 10 million, if you have a revenue of 1 million from this non-qualifying income of commercial property with non-free zone person and uh, non-commercial property, then 1 million will not be 1 billion will be excluded from that. So only 9 million will be considered for a total revenue, and 5% of 9 million is 450,000. 4,050,000. 450 amount is the 450. So which is basically, and anyway it is 5 million. So it is less than anyway 5 million. So 5 million is the amount. So you're not exceeding that. You can still get a benefit of a qualifying free zone person. Or also revenue from domestic permanent establishment and foreign permanent establishment. So here also this domestic permanent establishment and foreign permanent establishment will not be considered for a total revenue definition to meet your requirement of de minimis. So now looking at what are those qualifying activities, where you get a benefit of 0% corporate tax. So from the goods perspective, if you look at, if you do a manufacturing of goods or materials in a free zone area, so these are the activities you can look at it and consider if today you are doing it in the mainland or something. If you want to plan to shift to a free zone to get this benefit, you need to assess what is the benefit you are getting and saving you're going to arrive, and the cost of shifting your business from your mainland to the free zone. Does it benefit in the long term of having a 0% corporate tax? Now, this manufacturing of goods or materials, that is production or improvement or assembly of products and materials from the raw material. That means it could be, if you are producing, if you are making garments or processing any items in the free zone, then that is the benefit. Like if someone who's having a fit out or interior designing work, and for that interior designing, the woodcraft work is being carried out in the free zone, and then that item is being sold in the mainland, then you get a benefit because there is a manufacturing of goods and material taking place in case of your fit out materials, no, the woodcraft work which is being done in the free zone. So that's a qualifying activity. And then processing goods or materials, again preparation, treatment, transformation, conversion, so, and which are used for industrial purpose. As I was mentioning, like you have you have a bulk item of electronic items coming in, and you're packaging in a small packs for being sold off, or any kind of bulk commodities are being purchased, and if you are imported in the free zone and packaging it in a small packs, any kind of preparation is being done to being sold for further sell off, then that activity of processing is under the qualifying activity, and you get a benefit of 0%. Then the third main important is the distribution of imported goods or materials in or from designated zone. That is something which we will look in detail in the next slide, because this is something, a topic we need to get into detail hands-on in this. And then the fourth item is trading of qualifying commodities. It has to be these qualifying commodities are the one metals, energy, minerals, agricultural commodities. Those are traded in the raw form, and these are traded in the recognized commodities exchange. So it is not like you're directly buying and selling, but it has to be through the recognized commodities exchange in the raw form. Then these tradings could be a qualifying commodities, and you can benefit of having a 0% corporate tax on this. On the service side of it, what are those items which are qualifying activities on the service is holding of shares and other securities for investment purpose. That means the company in the free zone is investing in other companies, buying the shares of other companies, and for only investment purpose. They're not actually operating that business. So that is also a qualifying activity. Now, ownership, management, and operation of the ships is something detailed which we'll look in the next slide. Then reinsurance, fund management services, wealth and investment management services. These are specific services which are being monitored, regulated by the authorities, and these specific activities are also part of the qualifying activities. Then the sixth point is with respect to the headquarter services to a related party. Now, what is that headquarter services? Is the services which are being performed by a group company, a parent company, in terms of finance support services or HR support services, or the management services being performed for their companies. Maybe it could be performed for Oman company, which is has a free zone parent company, and they're supporting in the IT services, or it could be the finance support services for their operations in Oman, Kuwait. They have a companies in Oman, Kuwait, and other countries. So that is a qualifying activity. That support services of headquarter is a qualifying activity and get a benefit of 0%. Then the next is with respect to the treasury and financing services to related parties. That means any kind of fund arrangement being done, so facilities being provided to their group companies, that is to the related parties. Then and that being carried out from your free zone, then the earning which you make out of that is a qualifying activity. It doesn't get taxed. Then the other business is the financing and the leasing of aircraft is 0%, and the logistics services. So what is covered under the logistics services? Let's look at in the subsequent slide. So when I was talking about the ownership and management and operation of the ships, it basically covers your international transportation of passengers, goods, or livestock or animals, basically. So it is not a local transport, but it has to be the international transport or movement of that ship is taking place between UAE, Oman, or Kuwait, or or India, anywhere. So that international movement is taking place. Then that management of the ship and operations is the qualifying activities, and it can also cover your general assistance to the ship or dredging activities. Dredging activities are with respect to your oil operations carried out in the sea. So that activities are being also part of this qualifying activity, or leasing or chartering, even if you're doing that, activity is covered. But what is no, excluded from this is, when I say the local transportation, I mean, if you are having a yacht rental business, that is not, part of your qualifying activities. And it is a local transportation. It is for the leisure purpose, or any hotels, floating hotels are there, or restaurants are there. The businesses within, as generally the local businesses happening around, and these are for leisure activities, and these are not a qualifying activity. And as we discuss about the headquarter services of like your management business services or senior management or business planning or group coordination of group activities, even procurement services or support functions being provided to the group companies are basically your headquarter services, are basically qualifying activities. Then with respect to the logistics, that includes storage, transportation on behalf of another person, cargo handling, your brokerage of that, freight forwarders, documentation preparation, packing, unpacking. So this logistics services is a wide range of activities which could be in any form. All the freight forwarders get benefit out of this, or even the courier services which are being performed for this are also under the logistics services. If you see the car warehousing facilities being provided, so any kind of related services which are there are part of the logistics services, and these get benefits. So those services need to be looked into it. What are those in relation to the logistics services, and if these fall under this, they have this benefit of qualifying activities. Uh, and then as I was talking about the distribution activities, now distribution is a bigger area which like this distribution is basically is important to know. It is in and from the designated zone. So if you have your setup in a Davza free zone or Jabal Ali free zone or any free zone which is a designated free zone, and you are buying your in and from, that means it has to land to that the custom port, and then the movement is taking from there. So then only they get benefit of this distribution activities. So these electronic items which are bought into the DAFZA designated free zone, and from there it's being shipped or distributed within UAE mainland, or it's being shipped to Oman, Kuwait, any country, but that goods has to physically land and being custom cleared and dispatched to any other. So that is a distribution business which is taking place, and it's the purpose of that is for reselling. It should not be for the purpose of ultimate being sold to the end consumer, but it has to be to the deal. It is distributed to the dealers and further for resale. Those activities of distribution are covered as a qualifying activity, and it could be in the form of buying, selling, storing, or inventory management, that is warehousing, handling, and transportation. That movement of goods has to take place of importing in the designated free zone of DAFZA, double Ali, any free zone, Ras Al then it's moving out to any other mainland or outside country. So it is very important to know about this, and we look at some of the examples. So, as I was mentioning about those manufacturing, processing, or designated fee, so this is for manufacturing services. Say for this I was mentioning, like this manufacturing could be carried out in the Ras Al Khaimah free zone, and this for this manufacturing activity, it did not be in designated zone only. So it could be in any free zone, whether be designated or not, it can still qualify, but that manufacturing activity has to be carried out in the free zone, and it could be sold to a free zone person or a mainland company or even exported, because this activity it's still qualifying activity, and it's a qualifying activity. So any qualifying activity done to a free zone person or outside the free zone person still get benefit of 0% tax. Now, this is the scenario where you have distribution of goods. So when I'm saying that, distribution of goods, like trading in the electronic items, or you are getting it imported from manufacturer countries, suppose China, you're buying it and you're physically importing it in DAFZA free zone. And then from there, you are redistributing it to the UAE mainland, then the profit you are making on this is a 0% taxable. That's a qualifying activity. So it's important that it is coming to the designated free zone physically, and from there it is being cleared and being sold off in the mainland. Now this is a scenario where you are I mean, it is imported from country A to country B and it is not landing in the UAE. Now, will this be a qualifying activity or not? So as of now, this is not being considered as a qualifying activity. So if a country, if you're getting an item from China, electronic item, and being dispatched directly to Oman or Kuwait, any country, and it's not landing in the port of UAE designated zone, then in this case, this item is not considered as of now as a non-qualifying activity. It's not called non-qualifying income. So it is not yet clarified, but we are still yet to have this clarity whether this will be going forward in the future, whether this kind of businesses where it's being exported from country A to country B directly without touching the port of UAE, will this be in the future considered? But as of now, these are not being considered as a qualifying income. Now, what are those certain the non-qualifying revenue, basically excluded activities, which even if it is done within the free zone or outside the free zone person, they don't get benefit of 0%. These are the 5 activities there. So transaction with a natural person, except ownership or management of ship, fund management services, or financing or lease aircraft. So any activity is other than this, if it is with a natural person. Suppose there's a retail store in a DAFZA free zone, and it's selling out the items directly to the end consumer there. So it's sold off to the natural person, or a coffee shop is there. The coffee shop having the setup in the free zone, and it's a walk-in customer who are having that coffee or having a meal there. It's since it's being sold to the natural person, then this is not a qualifying. It's specifically excluded activity, so doesn't get a benefit of 0% on that. Then banking activities are specifically covered and regulated. These are also part of the excluded activities. And then insurance activities are there, which are, but as we see that, under the qualifying activities, reinsurance or headquarter services to related party was covered. So other than this, any other insurance activities are excluded activities. And then financing and leasing activities, except financing to related parties, aircraft ownership or management. These are the activities which we have seen earlier, that these 3 activities, financing to related parties, that means finance by a group company to subsidiary company, then that is a qualifying activity. So it doesn't get, so only financing and leasing to an independent party, that is basically excluded activity and doesn't get benefit of 0%. Then again, in terms of the property, immovable property, other than a transaction with a free zone person. So as we see that, this, if it is a immovable property of commercial business and it is done with with any other free zone, a non-free zone person, then it's basically a excluded activities. But if it is done within the free zone person for that commercial rental business, then it is a qualifying activities, which we have seen earlier. So, and if you see those are basically a source of income based on, this is a qualifying free zone person. If he might have a source of income from a non-free zone person or a free zone person. So when he's having a source of income from a free zone, non-free zone person, that means if a Jabal Ali free zone person has the income from the mainland entity LLC company, then in what scenario it is basically a taxability. 0% will be applied on the leftmost if you see qualifying activity, which are all specifically included and can be done with the free zone person or outside the free zone person. You will still benefit at 0%. But when it is being done with the non-qualifying activities, which are like, suppose if he's doing a consulting services, and consulting services, if it is done within the free zone person, as it is not specifically excluded activity, then it is 0%. But if that is done with a mainland company, a DMCC company doing a consulting services to the mainland of Dubai, then it will be part of a non-qualifying activity. But if it is within the threshold, that means if this DMCC person has a revenue from a free zone person of consulting services and as well as from outside the free zone, that is the mainland, then he has to see whether he is crossing the total revenue, is it crossing the threshold of 5% or the 5 million revenue. So if it is not crossing the limit of the threshold of 5 million or 5%, then it is 0% qualifying. It is a qualifying income, 0%. But if it is it is crossing that limit, then in that case, he will not get a benefit of the qualifying free zone person. That means in overall income. So if he has like 5 million as his total revenue, out of this 5 million, if he's making 2.5 million revenue from the mainland and 2.5 million revenue from the free zone person, since it is 50% of his income from revenue from the free mainland companies, then he will not. If it is up to 5% and the total value of threshold of 5 million need to be considered. If it is within that limit, then it is a de minimis rule. He's having within the gets a benefit of 0%. But if it's exceeding that threshold, then it will not be. And then this is basically non-excluded activities. And again, I mean, zero for a free zone person, non-excluded activities are basically a qualifying income. And excluded activity need to see a threshold limit. And then similarly, this is what we have discussed earlier for your domestic free zone person or basically your immovable property. It's the same summary of what we have discussed. So what you actually, this is a summary of what you need to know about it, for a qualifying free zone person status, know your self, basically, whether you are a free zone person based person or a non-free zone based person whom you are dealing with. Who are you dealing with, a free zone person or a non-free zone person? Because if you're dealing with a free zone person, then any kind of revenue generated will be a qualifying income, provided you meet your conditions of substance and educate business being carried out from the free zone, and you have it is not an excluded activity. But for a non-free zone person, you have certain conditions that it should not be an excluded activity and it could be only a qualifying activity. And then other de minimis rule need to see another conditions being met for a free zone person to be looked at. And then you need to see whether it is a qualifying activity or excluded activity. And then you would know whether you are actually eligible for this benefit or not. So now moving on to the next section is on the connected persons related party. Now my colleague Shraddha will take over this topic on the transfer pricing. So Shraddha, you are there, you can take over this topic.
Yeah, thank you, Manish.
So I'll stop sharing and you can share your file and take over that.
Sure. I'll just share my screen. Just give.
Yeah.
Yeah, I hope it's visible. Hello.
Yes, visible, Shraddha.
Good afternoon, everyone. Thank you, Manish. Thank you, Ankita, for the introduction. So, I'll be running through the topics, especially on transfer pricing, connected persons, and related party transactions. So, with growing TP, with growing tax in UAE especially, and with OECD coming up with Pillar 2, Pillar 1, BEPS, everything, TP becomes a very important aspect, and it should be looked with all the nitty-gritties. And we won't be able to cover a lot in this session, but yeah, we'll be covering what is a connected person, how parties are defined as related parties, what are transactions, how should we go with the arm's length nature of a transaction. So, as per the law, if any person is owning 50% or more as an ownership in other person, or it has control over other person, or they have a common control, they are termed as related parties. And in such scenarios, any transaction between these related parties, we'll have to look at them separately, analyze for their arm's length condition and maintain proper documentation to justify the transaction. We'll see about the transaction and its influence, shifting of profits, and much more about those transactions in detail. Given my personal experience with UAE, most of the groups have individual ownership, and they are owning more than 50% in all the entities. So by default, they are becoming related parties. Also, an owner of the taxable person, like the shareholders, the directors, or the officer of the taxable person, they are also becoming the connected person. And any transactions with those connected persons, such as salary paid, any other transaction which are, with if they are drawing any funds, providing any funds to the companies, all these transactions come under Article 36 and they are termed as connected persons. We also need to look into detail of these transactions. So related party as per the law is being defined till the level of fourth degree of kinship. So if they fall in the under the till the fourth degree of kinship, they are being termed as the connected persons. So here we have tried to demonstrate the TP with an example. So what is happening here is company A is selling a product to company B for AED20, where it is selling the same product to company C, which is a related party of A, at only 10 dirhams. So what is happening is it is earning more revenue from company B, but while selling the same product to company C, which is its related party, to influence their group's pricing, or to generate more revenue in company A through B, but not through C, they are shifting profits to company A and selling the same product to company C at lesser price. So what will happen is this is a not at arm's length from a transfer pricing perspective. So the TP authorities might question this transaction and they might adjust the profits of the company and ask the company to pay additional taxes on the revenue, considering the prices to be sold at 20 dirham and not 10 dirham. So basically, as per the transfer pricing, there are 6 different methods through which we can establish. What we saw here is a direct method where we have similar transactions with both the related parties and the third parties, and it is known as the comparable uncontrolled price method. Now, this might not be applicable for all the scenarios because generally we might not have similar transactions between the related parties and the third parties. And even if we are having, there are many other criteria which need to be fulfilled. It should be the exactly same product, quantity should be similar, time frame should be same. So there are many other criteria which we have to go through before we can call it a direct cup. So the transfer pricing aspect provides various other methods through which we can demonstrate if the transaction is at arm's length or not. And these are resale price method, which is basically used for a distributor, cost plus method, which is used for a manufacturer, TNMM we generally use for service providers, and in case resale price or cost plus are not applicable. We use TNMM for distributors and manufacturers as well. Profit split is again used in a very high valuable transactions like royalty and all. And we use other methods for transactions such as, salary withdrawn by the connected persons, any other rent payments, or any other transaction for which the other five methods are not applicable. So basically, the most common used method is the transaction net margin method, which comprises testing the profitability of that transaction with the related party through that of an external benchmarking. Now, this external benchmarking can be from any of the databases, Orbis, Osiris, TP CompuStat. For loans and fundings, we use Loan Connectors, Bloomberg. So what we generally do in this is we test the profitability of the tested party, which is our client, against the market driven companies or in a set of third party companies and test their margin range. If the tested party's margin is falling within the range, we can justify the transaction as a arm's length and there is no shifting of profits. So these are some illustrations which are payment to connected persons. So there's a company which is ABC LLC, which is paying either salary, other perks like rents, or it is paying interest on loans, as I was talking about the funding transaction, to any of the connected persons. So these are the general benchmarking methods which we use. So salary and all, we can, see from the websites like Glassdoor and all, and find a comparable if it is there. Otherwise, we test the profitability of the of the margin of the company at the net level after the salary payments is being made. For rent payments, we check websites like Dubizzle, Payout, etc. For interest on loans, we see if there is any third party funding within the company and compare with those bank rates. If it is not there, we perform a different interest benchmarking from Loan Connector or Bloomberg, etc. S&P sometimes. Now, one very important aspect over here is, FTA might challenge and might scrutinize any unusual changes. Like suppose in 2023, we were not paying any salary to the connected person, but 24 onwards, just to get the benefit of lower taxes, we have started paying very high salary, and which might not be justified also. So that in that case, FTA might scrutinize further and might audit. So in that scenario, it becomes very important to know the salary thresholds specific to your company and accordingly charge the salary. Yeah. So some other examples of the related party transactions are group level etiquette contracts. So suppose there are 5 different jurisdictions which are having related parties. They may have a global contract with any third party. So how is that cost allocated? What are the pass-through expenses? What are the group synergies being created? All those things we need to analyze. Second, maybe the centralized functions, which can be finance, admin, etc., which Manish was also talking about. So all such functions, how costs are being allocated, how are we charging to the entities? All these things we need to look into. So this is a very common example, especially in UAE, that any labor he or she is having a labor card or employee within the entity A while he's working for the entity B. So how are these costs being recharged? All these things. Salary payments, which we already discussed, how do we benchmark? Now, electronics supplied by India to UAE within the group entity for sale in UAE. This is also related party transaction, and we need to check for the arm's length nature. Loan by India entity to UAE entity, or might be from any other country also. So any such financing arrangements, all these related party transactions, we need to look into detail. So these are some other types of related party transaction. This list is quite exhaustive. And services, basically, it might be any kind of service, IT, ITS, sales, marketing. Goods generally cover the sale and purchase of goods. It might be raw materials, finished goods, traded goods, tangible properties, financing arrangements, as we discussed, royalty and license fee. If any of the entities are paying royalty to any other entity or license fee, we perform a royalty benchmark, and we need to see that royalty is not exceeding the arm's length threshold. Any other capital transactions or intragroup services, which is very common, intragroup services, because always to have the group benefits, we have one common entity which is providing financing or admin functions to all other entities. So all those cost allocations which we need to look into detail. Also, any other domestic transaction which is being undertaken between the entity at free zone and that is situated in mainland, so which are not tax neutral. So we need to check into the arm's length nature of these transactions as well. And last but not the least, the connected person arrangements, like the salary withdrawn, the funds provided or taken by the shareholders or directors' remunerations. All these things we need to analyze. So maybe the details of the methods and all we can cover in next session. And I'll hand over to Pradeep for the next topic, which is CT administration. Pradeep, you're there?
Yeah. My topic is automation.
Yeah, Pradeep, so you can take this automation on this. So you can remove the
Yeah,
slide.
I'm not able to share my screen.
Yeah, I just stopped sharing mine now. I hope you can share now.
You're able to see my screen?
Yeah, I can see.
Okay, just a second. Let me do a setup. Okay, first of all, thank you so much for this opportunity and those who have joined this webinar. I think some people got invitation through WhatsApp. So I just want to make an honest confession that WhatsApp message, what you have received, that is not sent by a human, it was sent by a bot. So basically, I want to demonstrate you 3 case studies where how automation can help us in doing our work in a more efficient way, saving time, increasing our productivity and efficiency. So I will resume sharing. So I straight away go to so basically this is how an architecture looks like. So basically it starts with opening an Excel file. So the bot will retrieve the name, the number, and so in this particular demo, what I did, I just made some small changes. I showed it like how you can send your tax invoices to your customers. Okay, so basically the activity starts with bot opening an Excel file. Then it will retrieve the customer name, mobile number, amount due, and VAT amount, and it will store it as a variable. Then it will open the WhatsApp business account and it will check whether the number is there in WhatsApp or not. If the number is there, it will update. If the number is not there, then it will update Excel file that this number is not there in WhatsApp, and it will end. Then it will go to the next process where it will attach the invoice. It will type the WhatsApp message. It will enter the what is the service, and it will also enter the what is VAT amount, and then again it will update the Excel file. So I want to show this demo live. Let me check if I can do that. So basically, this is the Excel file, okay? So I have put some names, like I have put my name, Manish Sharaf, Manish Pucha. Then I have added like 3 services, what is the amount of service, what is the VAT amount, and what is the total due. I will add one more user as test user, and I'll put some number which is not there in WhatsApp, okay? So I hope this number is not there in the WhatsApp. And put it as test. Anyway, it's not going to send the message, so I'll just put any. Okay, so I'll just save this file and I'll close it. Okay, Now let me run the tool. Okay, basically this project is developed using Microsoft Power Automate. Okay, Power Automate has two components. One is the desktop, which is also called as robotic process automation, which basically mimics all the human actions. Whatever a person does in the system, the robot also emulates or imitates the same action, and it will run it in a loop so that there is no human intervention and bot does it on its own. So I'll just run this play button. So let's see, hopefully it should work. So yes, it started working. It opened the Excel file, as you can see, and it is going to search the number. So the first number it will enter. So as I told you, this number is not there in the WhatsApp. So now it on the backend, it already updated the Excel file that this number is not available in the WhatsApp. Now it will go on and type the next number, which is obviously my number. So it found me. So now it will go to the next action, which is attaching the invoice. Basically, I put the same PDF file and the name is same, my name is same. So it is just using like a VLOOKUP. So if it is able to get the same name, so it will fetch that invoice. So all the type of service, the amount, the VAT amount, everything it is picking up from that Excel file. Then it is attaching the invoice. Going to the next one. So Manish Sharaf, this is your invoice. I hope you will pay this. There you go. So it's not me typing, it's a bot which is actually typing. And the last one. So this way I was able to send invitation to almost more than 1,500 people whom I know, whom I had the contact numbers. It basically took me just 2 working days to do that using this particular tool. So like this is one way how you can use robotic process automation to automate your repetitive tasks, save time. Okay, now the activity is completed. If I open the Excel file, okay, basically it has updated. See, first one, it was not able to find it. The second one, it is updated as message sent. Okay, you can see this. So this is the first demo which I wanted to show you. So now going back to the second demonstration. So we have seen how RPA can help us. So now let us take an example how Python can help us in doing automation in a very fast way. Okay, I will take this particular case study. So in this case study, basically I wanted to do a GST reconciliation. Okay, I have like 3 reports with me. First I will get that reports. I will do certain validation checks. I will check whether the place of supply, date of supply, all these informations are available, and if it is not there, then I will assign certain rules. Okay, like how a user is doing. For example, I want to enter, so I will just manually type, and based on certain rules or certain logics. So similarly, in this particular case, there are total around 60 rules. Based on that, reconciliation has to perform, and finally the automation, it will open that Excel file after performing the reconciliation. I'll just demonstrate this also. So the GST reconciliation started. This we did for one of Indian client. So this is the first report. It's going to open, and it is going to 20 rules, just matter of few seconds. So this is the speed of automation, and this is why we should embrace the technology. Because if you are using an Excel and if you're putting VLOOKUP, grouping, all these things takes a lot of time. So in this one, 61 steps happen in just fraction of seconds, and the reconciliation is performed, and it will open that Excel file. Yes, there you go. So it was able to tally almost everything. There was no difference at all. Basically, this was the last, after doing all the adjustment, this was the final report. So that's why you are not able to see any difference. Otherwise, definitely there were some cases where you will find reconciliation. So this is the second case study which I wanted to demonstrate, and in the interest of time, I wanted to show few more cases, but I don't have time. So what I will do, I will tell you how you can convert an audio file into a minutes. Okay, because we are attending a lot of webinars, a lot of seminars, and we will get a lot of like audiobooks or podcast, or maybe you can record some of the webinars and you want to get a quick summary of what is all about. Okay, how to do that? I'll tell you. Okay, let me okay, I have a couple of video files. Let me see if I can use this particular one. Okay, how to do that? You don't need to be a programmer to do this. Okay, this is a small trick I'm going to teach you. It is very simple. So I'll just open a blank Word file. Okay, and I will go to this transcribe. Okay, this option, dictate and transcribe. Dictate will basically record the conversation. Okay, for example, if you're going to any meeting and if the tool or it's not giving you an option to record, basically you can use this feature. Transcribe will give you two options where you can upload an audio. Okay, now I will upload this, yeah, tools. Let me, I think there is some problem with this one. Maybe let me try if I can upload this. So after this, we will be using Microsoft Copilot to generate the summary. We will be demonstrating that in few moments. Will take another minute, maybe. Almost done, guys. Only 9 minutes to go. It's almost done. Yes, so there you go. So you can see the complete conversation it has, documented. So you can basically add this into a document. Okay, then you can go to file, save as. You can maybe save it as a PDF file. Okay, download. So I will save it in the desktop as sample audio file. Okay, so where is the sample audio file? I'm not able to see. Yeah, sample audio file. Okay, what I'll do, I'll open it with Microsoft Edge. So this is the one way of, I can ask Copilot. So this is nothing but your Microsoft Copilot, where I can directly chat with this document. Summarize this document. See, it started. See, so basically, it is a minutes of meeting where it is actually summarizing what was discussed. So like this, you can quickly generate insights, and you can chat with any document. You can, maybe you are attending any webinar or listening to any podcast, so you can generate summary out of that. So that is the third. So basically I demonstrated first how you can use robotic process automation. Basically in this demo, I have used WhatsApp, but you can use it in any of the case, in anything which you can, for example, for VAT, okay, or for corporate tax, you may have to download a lot of reports if your systems are not integrated with any of the business intelligence tools. So then you have to manually, as a user, you will log into the system, you will download the report, then you will perform your reconciliations or VAT report or all those things, right? So this downloading activity, which is a manual, that can be assigned to a bot, and it will do the complete, it will download the report for you. And next comes the reconciliation. Reconciliation, you can either do it through a business intelligence tool like Power BI, or you can use Python. Basically, I use most of the cases, if the visualization is not required, then I will use Python because it is very fast. And if you want to demonstrate any reports, then you can use Power BI. Let me see if I can show you a Power BI dashboard. Manish, how much time I have?
We have only 2-3 minutes left out, because then we will run through the question answers, questions they have raised.
Okay. So it's taking some time. Yeah, basically this is a Power BI dashboard which is integrated with directly with the source data. So I can see the performance versus the last year versus the budget. And if I can filter by entity, then I can see. For example, if you want to prepare any report and you want to give it a visual appeal, so basically you can go for a Power BI dashboard for automation. So guys, the future of chartered accountancy or the profession is about blending the traditional wisdom with the modern technologies and providing the best consulting experience to the client. So I would request everyone to spend some time on AI, or what are the tools available and how we can augment or increase or improve our efficiency. So that's what my closing remarks. So thank you so much, Manish, for giving me this opportunity.
Thank you, Pradeep, for running us through what automation can do and how we can take a help in our tax reporting or tax compilation, and as well as in our other routine activities, which is a manual activity. So now, just wrapping it up, and before we get into the question answer, we were just at this city administration topic. So I'll just quickly run through this portion of it. So part of a city administration is basically filing a tax return, which I mentioned earlier, that it is one return of corporate tax to be filed, and it is 9 months after the closing of the financial period. So if financial period is December ending, then your first tax return to be filed is 9 months thereafter. September 2025 will be the first tax return to be filed, and it need to be filed electronically. And if you see, this is generally kind of how you do an adjustment, what your net profit is reported as per the financials. You need to do certain adjustments because there are certain expenditure allowed, disallowed, that need to be adjusted. Any kind of related party transactions that need to be reported as arm's length, those adjustments need to be done. Or your intra-group transfer, unrealized losses and gains, which are not allowed in the corporate tax purpose, that need to be. And then finally, for when you derive a taxable income, then any kind of foreign tax credit which you have paid outside UAE, you get a tax credit for that. So those adjustments need to be done, and you finally derive your taxable liability for the corporate tax purpose. So this is how in summary it look like the adjustments we need to be done and reported for your tax return purpose. Then for you to be ready, what you need to look at the structure of your setup, what is how many which entities you have in mainland or free zone, or your shareholding structure that is there, and then you need to see whether you want to group those entities or need to do a standalone reporting for the corporate tax purpose. And also when you have a free zone, whether you fulfill the requirement of a substance, that whether you have substance in terms of your operations, and your assets and expenditures are being incurred to support your substance in the free zone for to be qualified as a qualifying free zone person. And then I know what then you need to look at the transactions between your group company, what kind of transactions you have, whether you have a supporting documents for arm's length benchmarking requirement. Are you meeting those requirements as Shraddha was mentioning about those transactions for connected parties and related parties? And then look at whatever the exempt income, if you have, that need to be removed for the tax liability perspective. And specific chart of accounts need to be looked at, because the items which are deductible, non-deductible, like expenditure with respect to your entertainment for your customers, for your channel partners, there's a limitation for that. And also interest on your financing activities are also has a limitation. So all those need to be looked into it. And also, as I was mentioning, whether you have any POEM in UAE for any business outside UAE, that kind of setup structure need to be looked at, whether that will be included in your UAE income taxability or not. And then of course you need to train your people to be aligned with the requirement of corporate tax, and then also carry out a mock assessment for your tax liability for the immediate financial period, so that you know that what is the tax liability arriving, if you consider all the aspects of it, of the requirement of the regulations. So how we can help you is basically we carry out impact assessment on your financials, look at what are the requirement of the corporate tax, and how what is the tax liability which will arrive considering your financial period of 23, and work out of the tax liability. And then we assess what changes can be built in terms of the shareholding or chart of accounts, which would have can potentially have a better planning for a corporate tax readiness. And then we compare what is the tax liability coming in as a scenario, and what is the changes we are recommending it. We present you the tax liability impact, and then help you on those implementation support, identifying the related parties, transactions, connected parties, payment, and we help on those implementation and documentation for your readiness to be for 24, where if you have your tax period applicable from 24. So we help you on that implementation support. So now we are open for the question answers, and we can take up whatever query or observation you have raised. So if I look at the questions which I can see, with respect to the first question which I can read out is that for the free zone persons, respect to that, if you can we outsource a core income generating activities for a free zone person? Yes, we can outsource. As I was mentioning, if you are if you want to get if you're importing in bulk and want to do a packaging or repackaging processing from a third party, but which has to be based in the free zone. So if you are in the DAPSA free zone, you can outsource to any other free zone, but that person should be based in free zone and they need to be educate supervision. So core income generating activity can be outsourced, but it has to be educate supervision on that. Then the another question which I see is that if a company has a branch outside UAE, but it is based in a free zone, and shall it submit according to consolidated financials with its branches or a standalone basis? So where it means that if you have a DMCC mainland entity, DMCC main trade license, and you have a branch in Dubai mainland, so no, for your internal financial reporting, you will consolidate it. But for your tax liability arriving it, you need to maintain separate separate books of accounts, because your tax liability for branch is in mainland is 9% taxable, whereas for your qualifying free zone business, it is 0%. So you need to, for a tax liability computation, you will have a separate records being maintained. But for your internal financial reporting, or you can have a consolidated financials being done. Then looking at okay, so if qualifying free zone meets all the condition and still it does the business with the mainland entity, what will be the implication? Yes, with respect to a qualifying free zone person, if he meets all the adequate substance and carrying out the qualifying activities, and if he still want to do a business with the mainland activity, as we see that, business with the mainland activity, business with the mainland entity can be done with respect to only qualifying activities. So there are 9 qualifying activities which are listed down. If you are doing those qualifying activities business with the mainland entity, then you can still be getting the benefit of 0%. But if you are doing any kind of excluded activities and it is crossing the diminished threshold limit, then you lose out the benefit of qualifying free zone person. Then say that okay, with respect to the processing of goods outsourced to another free zone person who does the job in the free zone as well, and as well as in the mainland entity, would be counted as a non-qualifying activity. So now if you are outsourcing your processing of say packaging or repackaging of your material to a free zone person, and that activity is carried out in the free zone area, then you can still benefit of that qualifying as a, because that you can outsource your qualifying free zone activity to another free zone person. But if he also does that similar activity outside mainland, it doesn't bother to you because your business is being carried out in his free zone area only. So that ways you can still be benefiting of that outsourcing to a free zone person. He might be having other businesses being done in the mainland, but it doesn't matter because your activity is carried out in the free zone and you are able to have adequate supervision on those activities. Then with respect to the qualifying activities and services, FT has released any further guidance with respect to the fund management, wealth management services? As of now, no, because these are regulated activities. There has not been any further guidance being released. We might expect something in the future, but as of now, not. And it's as per the regulations of regular. There are different regular authorities who are managing this investment activities or fund management services. Now, other question which was with respect to shipments which are being billed directly to overseas customers. So as I was mentioning, if there's a movement of goods from country A, from China to Oman, country B, and there is no physically movement to UAE, and there's a billing happening from UAE. So this is a high sea sale third port shipment. So it's not touching the port of UAE. As of now, these are not considered as a qualifying activities. It's not clear and it's not announced as a qualifying activity. So we assume this as a taxable, and maybe further clarity and guidance being given on this. And because most of the business, I suppose, in UAE are based on this third port shipment or high sea sale where it's not touching the UAE. So that still the clarity has to be given, and till the time the clarity is not there, we assume it is still taxable in the UAE. It's not a qualifying activity. So yes, I think that these are all the queries being raised, and if anything is there, you have our details in this. You can drop us an email or send a call us, and we are happy to address any of your queries. And if you require any kind of consultation, we will be happy to help you out, whether it be on the tech side, and Pradeep, as he was mentioning about the automation side of it. I mean, we can help you on the automation side as well. So yeah, thank you all for being a wonderful audience and listening to us. And it's a great topic. The more and more we hear about it, our knowledge on this becomes better on this. So yes, do let us know for any of your queries or anything which you want to discuss. We are happy to address it after this call. So thank you.